Welcome to Startup Simplified, Ian. How are you?
Thank you for having me. I'm good.
Great. It's so much. It's such a pleasure to have you. I think we were doing this series of sorts wherein we want our audience to understand more how venture capitals work, right?
Yeah.
All this while, a lot of people are not aware of how venture capital funding works. They really don't know how do venture capitals make money as well, right?
Okay.
So there's a lot of confusion, right? So our effort from this series is to ensure that people get an idea, right? And also startup founders get an idea of some do's and don'ts, which direction the market is in right now, and a lot more, right? So let's start with a very straightforward introduction of yours, right? Let's quickly understand who you are from your background and what are you doing right now.
So I'm currently a venture capitalist, but I don't come from a typical background.
Okay.
I'm an engineer by training, but so giving you a bit of a flavor.
Sure.
I grew up in a stereotypical Asian family who values hard skills, math, sciences, natural sciences to be specific. And I took natural science major in high school and subsequently to mechatronics engineering.
Oh, nice.
College.
Nice.
But not knowing the real kind of business world, what Indonesia is like, what's the demand, what's the supply of talents, of industries. So I just follow the stereotypical path. But somewhere during my high school days, I think someone planted the seed of, hey, you should develop your career in corporate finance.
Okay.
I didn't know what it was.
Sure.
Internet wasn't what it is today. So, yeah, I'll figure it out one day.
Sure.
But I just took engineering, and upon graduating, it dawned to me that a mechatronics engineer didn't have that many opportunities.
What is this mechatronic engineering?
Mechatronics engineering is basically the combination of
It's a combination of electronics,
electrical engineering and mechanical engineering, a bit of programming as well. So ultimately,
interesting.
automation.
Okay.
The buzzword is IoT nowadays.
Okay.
Okay. So that's the
Which year was this?
2022. Was my first year. Yeah.
Okay.
In the uni.
Okay.
And yeah, when I graduated 2006, I think the industry wasn't this as developed as it is today.
Sure.
And hence the opportunity for automation and whatnot was very limited. And also a bit of dynamic that I experienced. So we were educated from, I don't know, the first year of education until the later years in the university to excel in the technical aspects, right? To score well in the tests, in the exams. And basically, they told us that things will be fine after. But it was interesting whereby there was this career day at the university,
Sure.
and they sort of disclosed a few openings in the company, and there was sales engineer, there was something else I forgot, and there was drafter.
Okay.
The drafter's work is by far much more technical. then the sales engineer.
Absolutely.
We were educated for 12 plus the university years to excel at the technical skills. But when the company sort of shared the salary range, of course, the drafter got paid the lowest. The sales engineer got paid. It was
Welcome to the world.
that nobody really educated us beforehand. So, and therefore I was at that time questioning, what was what have I been doing the past dozens of years? But so, at that time, I just find any kind of opportunities. I did my first work was not in the finance world, but at that time it triggered my curiosity and also my drive to learn more about how the economy works, how the business world works. And long story short, I applied to explore other opportunities, including banking and whatnot. And actually, the first interaction or the first entry to the sort of finance world was a friend of mine. We met at a reunion. She worked at EY, and she was resigning because she is getting married, and she was finding a replacement. And at the reunion, she's been talking to a lot of former schoolmates about this opportunity, and I sort of took the opportunity. And long story short, I joined EY. At first, it was not a corporate finance advisory role, but after a few years,
So you did not study corporate finance. You learned it on the job.
I learned it on the job.
Oh, wow.
It was tough.
I'm sure it was. How did this venture capital happen to you?
10 years doing
Corporate finance in various roles?
various roles, and also a friend of mine introduced me to an opportunity. He was a founder of a company, a startup. It was 3-year-old,
Okay.
and it was kind of maturing, and he needed a CFO, and because he needed also someone he can trust.
Sure.
And I decided to join his company for a couple of years, learning that my advisory years were, to an extent, also supervision.
Okay.
Because we always talk on a sort of helicopter view.
Correct. You're not hands-on.
We're not hands-on in the
Correct.
execution of the business.
Correct.
So, in that startup, I really learned the complexity, the dynamics of a real business organization.
Which startup was this?
It was Altera.
Okay.
Yeah.
Okay.
Nice. Payments business.
Sure. And from there you moved to Trihill.
From there, I moved to Trihill.
What does a VP of investment do? What exactly is the job? You're a VP of investment at Trihill.
That's the title.
What's your job?
My job is to lead the investment initiatives, the deals.
Okay. So analyst hunts an opportunity.
Yeah.
And they bring it to you.
Yes.
And then your role is to evaluate that opportunity.
That's right.
And then proceed with, in case if it is positive, then you go ahead with due diligence and blah, blah. Just walk us through a process, right? This is for a larger audience, right? Let's say I am a founder. Why let's say I am a founder? Okay. So let's take an assumption that I spoke to someone from Trihill team, analyst most probably, and we had this chat. And what happens after that? When does this opportunity come to you? What happens after?
So some opportunities or some interactions I also meet the founder.
Okay.
The very first meeting, but sometimes the analyst would hit the founder first. And I think, if the case is I meet him on the second chance, I got the chance to review the deck or do a bit of research on the internet, checking the website and whatnot. And then during the meeting, basically would like to understand basically the origin story of the person, the origin story of the business.
Okay.
And the objective is to understand whether or not we should proceed in doing due diligence and exploring more.
Okay. You Trihill primarily does seed funding, right? So let's talk a bit about seed funding, right? So these are the companies who are in a stage wherein they have raised some money in the past, be it angel round or pre-seed funding or more, right? And then they are moving towards seed round, right? So what do you look at the company which has already raised certain amount? What are the metrics which you look at in today's scenario?
The company.
The company. In today's scenario, of October 2023, we are in the middle of a very interesting time.
Yes.
So what does Trihill look at? Be it in terms of founders, be it in terms of metrics, what do you look at?
Yeah, I think for the business itself, we look at a term. It is to an extent a buzzword.
I love buzzwords. Yeah.
Product market fit.
Okay.
So typically the business won't be, if a business has already reached product market fit, it should be a Series A company.
Okay. Before we go into details, let's talk about product market fit. Okay. Because as you said, it is kind of a buzzword. And with every buzzword, a lot of people have different meanings of it. How do you define product market fit?
My definition of product market fit is the product is the answer to the market's need.
Okay, interesting. This is very interesting.
This is sellable, already full. If you offer it to the market will latch into it there.
Okay. But we are talking about companies which have already raised certain amount of money. So they have already tested the market with that. So in your definition, you're talking about a company whose product is loved or used by a large market.
Yeah.
Would that be correct?
That's right.
Okay. So Trihill looks at product market fit.
Yeah, but early product market fit.
Okay.
Because if it's already a clear product,
then
it's already sort of on the later stage of our appetite.
Okay. So one is product market fit. What else do you look at when you are evaluating a company?
On the business side, I believe product market fit is a metric that explains a lot, right? So I think for the business, and given the product market is also an unincentivized product market fit, right?
Correct.
So I believe it represents a lot of things, and that is a key metric that we look at. But moving probably to the founders, what we look at is, of course, hungry, generally smart, and also gritty.
Okay. Interesting.
Yeah. Or probably a more common word is resilient.
Yeah, I think grit and resilience, yes, both are super important.
Yeah.
Okay.
So I think the first trait, right, hungry, I believe it is the people with hunger would have the drive, the energy to solve problems and to because you're a founder, you know that it is not easy.
I mean, it looks so flashy, but it is not. It is very difficult. I think we will talk about this again. But before we move ahead, I just want to ask this. It's a very, very straightforward, honest question. Okay. Do you think all these qualities which you said, grit, resilience, smartness, do you think these can be faked for some time? Do you think some founders can fake it for some time to raise money?
Absolutely, yes.
Okay. Okay.
Absolutely, yes.
This happens a lot?
This happens. Well, it's also generally observable in the market, right? Whereby, let's say, some founders manage to raise a lot, but ultimately couldn't reach that product market fit. So it proves that some founders, or generally speaking of founders, they can fake it to an extent, manage to convince some investors, but didn't manage to.
Yeah, I mean, I agree. I mean, I always believed that yes, there must be founders who would be faking it, but I wanted to hear it from people on the other side, right? Okay. Let's talk more into your evaluation processes, right? What happens after you've met a founder? The reason I am asking you this process is because I have questions for each process, right? So that founders as well as general people get an idea of what it is to go through a seed funding round. Okay. So let's say you had the meeting, you like what you see, you like the founders, you like the product. For seed round, do you want a company to already be a revenue generating? Yes. Has this point of view changed in last 1 year, or has it always been like this for seed round?
For us, it's been the case.
Okay.
But I think what changed, if you want to dig a bit deeper there, is we look into the profitability metric deeper.
Okay.
Previously, it was revenue, but now we need to get down to contribution margin.
Okay. Interesting. So, again, I have not directly been involved, but I have observed the ecosystem very closely for the last 4 or 5 years. And I still remember like 2022, 2021, where people were raising seed rounds without any monetization at all, right? It's either growth numbers, still on very old metrics like daily active users and engagement rate and very vanity metrics, but not really core metrics as such. I believe for pre-seed it is understood because you're still in that stage. But when you're talking about seed, as you said, that it should be based on core metrics like revenue, and now you're talking about profitability.
Yeah.
Do you think seed is the right time for a startup to be really profitable, or do they need to raise seed round to become profitable? What do you think?
So when I mentioned about contribution margin, it's not bottom line,
Of course.
profit,
Of course.
but the business needs to show that it can generate money to support the back office.
Okay. Of course.
Generally, right, contribution margin would be revenue cut by the cost of goods,
Spend basically.
yeah, the cost of delivery,
Manpower, everything.
direct costs.
Yeah.
And if after those direct costs, there's still money, and the money can be used to, or it can grow to a level that can sustain the back office operations, then the business makes sense.
Okay.
So, and we believe even at seed stage, we should have an idea that
The visibility of when it is going to happen. Okay. Has this always been the core belief, or it has changed in 12, 18 months?
yeah. So that has changed.
Okay.
Frankly speaking,
Sure.
previously we look at revenue and gross profit. Then that's it.
Why do you think it changed? I mean, I understand global market economy, the lending rates, and everything. I understand those. But do you feel that it is changed only because of the sentiment, or what exactly happened?
I won't say that it's 100% driven by the interest rate, cost of capital, raising. But for me, it's 90% or even more that it is driven by, 90% or more is driven by the more expensive capital.
Okay.
And because frankly speaking, at the time we have that option to fundraise frequently, or fundraising from
Different LPs. Yeah.
was
Very easy.
easier option compared to nowadays.
Okay.
But nowadays it is tougher. Investors are more picky. They're also more diligent in terms of looking into the business.
I was about to come to that. Okay. So I'm just picking up from what you're saying, right? And then we keep going into the due diligence. Okay. Let's stick to the seed stage, right? What kind of due diligence happens now when you're looking at a seed stage company to fund?
We look at a lot of things. So like revenue, we tend to look at the list of customers, list of transactions.
Do you ref check customers?
Yes.
Okay.
Yes, we do that. We've been doing that. It is more important now.
No. Okay.
Yeah, basically line by line, we need to put our hands at heart that we've done reasonable efforts to validate the stated numbers.
Sure.
Yeah, including salaries, marketing
Expense. How often do you see major discrepancies in due diligence? How often do you find that there are massive loopholes? The reason why I ask is we as a startup of ourselves, Edutech, we are a very small startup right now. Not really in the revenue stage yet, right? Still, there have been instances wherein when we have been speaking to different funds or networks, they've asked to conduct due diligence, and they've done that. And they have found smaller errors, basically errors in contracts. They've asked that, hey, listen, this payment is not justified. Where did you put it? Can you share a receipt and everything? Which we have provided, which we were told when I was starting up in early 2020 that no one bothers, bro. I mean, for pre-seed, no one's going to bother. For seed also, no one's going to bother. Don't worry, right? But it's definitely changed. So by your experience, especially now because deeper due diligence is happening, do you find major discrepancies in what is being reported to what is reality?
In my experience, in our experience, he was not, how to put it there, in it's not numbers discrepancies,
Okay.
but more of how the expenses are booked.
Okay.
So
It's more of, it's, okay.
like the contribution margin,
Yeah.
what expenses should be considered as variable cost, and sometimes it's still in the OPEX that we need to move above the contribution margin.
Sure.
So more on that, and I haven't covered the balance sheet yet. Previously, which was the AR, the
Sure.
receivables.
Yeah.
We need to better understand how the receivables are being treated, whether they've put the reasonable amount of allocation for uncollectibles, let's say. How has the repayments been in the past? So I think those are the sort of discrepancy that you asked. But it is not like different numbers, like it should be 1 instead of 10.
Okay.
Not that case.
Okay. Interesting. Okay. So we cover due diligence, right? So let's say due diligence is done and it comes out positive. If it's negative, of course, you'll inform and say, thank you. But if it comes positive, what happens next?
So during the due diligence, it's not only us doing things.
Of course.
Isolated within the investment team only, but we are going back and forth, also communicating with the partners about the opportunities. So it's more dynamic than desktop, field trips and whatnot. And if it's a go, then
do partners meet the founders before giving a go?
yes,
Okay.
sometimes
Multiple times as well. Okay. Depending on the ticket size or depending on the confusion. Mostly confusion, I think. Mostly they're not sure. They want to like do it again.
Well, frankly speaking, our partners are very curious.
Okay.
So they want to know the business, the founders, and hence because communication is tricky, right?
I'm sure.
Our measurement, our ruler, may not be the same with our counterparties.
Correct.
We define as small, maybe or most definitely be different with what our counterparty consider as small.
Sure.
So, in terms of meeting founders, I think the objective is to, as much as possible, calibrate the measurements between the partners, us, as well as the
Sure. How long in your case, how long does it take from the first meeting to closing the round on an average in these times?
it is.
In these times.
Yeah. As you mentioned, like previously it was not.
Previously, how long it used to take?
Previously, it can be quite fast. We made decision in under 1 month.
Wow.
Yeah, previously.
I so envy the founders right now. Okay. And how long does it take in today's time?
Today's time, it can take months, 2-3 months, can be more. Yeah.
Okay.
I think 2 to 4 months
Is the average these days?
the range.
Okay. Interesting. Are you focused on any particular industry as a fund, or you are industry agnostic?
Industry agnostic.
Why does everyone say this? And then you see the portfolio, it's a bit tricky. But when you say industry agnostic, you still talk only digital industry agnostic.
I think why we are
Give me an example of non-digital. Maybe not a name, but industry.
F&B.
Interesting. Okay.
It is not digital, although sometimes or more often than not, it is supported by.
Well, I mean, every industry is supported by digital these days. So I mean,
F&B, right?
F&B is fair. Yeah. I really don't know what is the fascination which venture capital has with coffee businesses, but apparently they seem to be doing really well, even in India, Indonesia, and quite a few countries.
Yeah.
Okay. Interesting. Any specific industry on which you really are bullish as a fund?
So this, like any other organization, I believe it's a group of people.
Absolutely.
And of course, each person would have their own experiences, their own familiarity regarding the industries. So what we bullish on are the ones that we are more familiar with.
Okay.
So, and to an extent also what's proven, right?
Sure.
The retail businesses that we invest in, we're very happy about, and hence it drives our appetite nowadays toward
retail. Okay.
businesses.
So in retail, you do fashion as well?
No.
Okay.
We do health and wellness.
Okay.
We do F&B.
Interesting. AI, not bullish on AI?
I'm not saying that we are not bullish, but we have our limitation. I mean,
Okay.
we are learning about the AI space. We've been meeting many people to learn and to also identify which are the noises.
Yeah, I was about to ask you this. It's almost like you read my mind. I was just about to ask that, do you feel, in personal opinion, do you feel there is more noise about AI rather than real work which is done on AI? Do you think so? Because all of a sudden, every company, every startup is announcing that they are either using AI or they have a solution which is powered by AI, or how they're going to reduce their cost by 70% using AI. How did this happen so sudden?
Yeah, I think let's use the term we used previously, which is a buzzword.
Sure.
AI has become a buzzword. Some founders have made it even more of a buzzword.
Mm-hmm.
So we're doing this model powered by AI.
Yeah.
And then the person would give me multiple articles about AI on this industry. But when I asked, okay, what's your AI doing? Oh, AI would do this. Oh, okay. It's to me, it's overly amplified.
Okay. Interesting.
Yeah.
Interesting.
But if we dig deep enough, then no.
Okay, interesting. So let's go a bit back in the history, right? Bit back in the time. You started your venture capital journey at one of the most interesting periods in the last 2 decades, which is just 2 years back around COVID, right? There was so much of money out there in the market. There were so many angel investors as well during that period. I think retail investor also got a lot of cash sitting on hand. You started your investment journey during that period. Can you just walk us through 2020s? Just so that founders get an idea of what it was, number one. Second, the large funds which were raised during that period and how it has impacted those startups right now. Because a lot of those startups have raised large seed rounds but are not able to justify the valuations for Series A right now because the valuation for seed itself was pretty massive, right? So let's go a bit in the memory lane. So you just started in when did you start in 2020? What month? 2021. Oh, perfect. At the peak of things. Okay. So let's go a bit back.
Yeah.
How was it starting in 2021?
Okay, I need to give you a bit of context, right?
Of course.
So during my 10 odd years in the largely M&A advisory, corporate finance advisory journey, I've been advising, dealing with large corporations.
Sure.
These are like decades-old companies.
Yeah.
And also banks, right?
Yeah.
Who are to an extent regulated, who are doing things in a certain
manner. There is a process to it most of the times.
Yeah, strict process and whatnot. And I've been so used to that. Even during my startup days, I needed to adjust myself.
Adjust to the chaos.
Adjust and also adjust to the growth, frankly speaking.
Yeah.
Because Altera's growth were uncomparable to the growth of the large corporations.
Sure.
So when I did the financial modeling and whatnot, I needed to adjust my sense of in defining the assumptions. And 2021, as a VC, frankly speaking, my familiarity with the investment world during my M&A advisory time put me in a higher confidence level.
Mm-hmm.
And because of the years with the startup as well, put me in a certain level of confidence. But we didn't do a deal for quite a number of months.
When you joined Trihill?
Upon joining Trihill.
Okay.
Why? Because we were trained to look at what could go wrong.
Okay.
So I still remember the discussion. The partners were asking me, Ian, if we maintain the way we see things, we won't do deals in the next, I don't know how many months.
Yeah.
So probably we need to change our mindset. And so instead of looking at what could go wrong, we were thinking of what if things go right. So
very optimistic view.
More optimistic view. And in terms of also, right, when in the corporations, in a more traditional kind of businesses, we look at the historical numbers, we look at real reports and whatnot. But in a startup context, real numbers are very limited.
Correct.
So there's a limit to reviewing what's real. So what did we need to do during the early days was we need to read the people, read the founders. And it was not a trait or it was not a skill that I built.
Yeah, I'm sure. I mean, it's a very psychological very clinical psychology skills.
That's right.
Yeah.
And yeah, frankly speaking, we made those change in mindset, and hence we were able to deploy quite
Aggressively. Do you, okay, I think a personal, very personal observation from my side, with whatever time you have spent off camera and now, I personally feel that your style of work is more suited for today's economic environment when it comes to startup investment. Do you agree? Yeah, do you agree, right? I do agree. Okay. So, nice, I got that right. Okay, let's talk about the investments which you made during that peak, right? And these were primarily seed rounds, right? It's pre-seed, seed rounds, mostly seed rounds. Mostly seed rounds, right? Again, I don't want to take names. I don't want you to take names either. Do you think the valuations were justified? We heard some crazy valuations back then. Look, I was not part of the ecosystem, so I really don't know. I'm talking about from what I read and what I hear from other founders. But these are all closed door conversations, right?
Yeah.
Do you think in hindsight, do you think those valuations were justified? So 2 questions, okay? I don't want to put you in a spot, okay? 2 questions. You can choose, right? One is, were the valuations justified? Or do you think those high valuations are becoming a problem for those startups now?
It is becoming a problem for those startups.
Why?
Because, sorry, to use more technical jargon,
Please.
in investment exercise, there sometimes we use forward multiple,
Okay.
and that forward multiple is basically assuming that this startup, this company, would reach the targeted whatever that is, revenue,
Profit, whatever, yeah.
also can also be those vanity metrics.
Sure.
Yeah.
Okay.
But the problem that is faced by the startups who raised at a big valuation is that they need to deliver that
First, to raise any other further round.
So it has become more of a problem if the valuation is too steep.
Why do you think, why do you think founders insisted on such high valuations at that point? I mean, I don't really know. Like, for example, when we decided to raise our pre-seed, we are still in the process. We were supposed to come with a valuation, right? We are a non-revenue company at this point. I won't share the valuation on the on camera, but we put out we are putting our valuation in single-digit million on the lower side, right? And a lot of them were like, "Why you're valuing yourself so low?" I'm like, I don't have any revenue right now. For me, the only benchmark which I can put is basically a certain amount of growth which I can see in the future, in the coming future, right? Why do you think back in 2021 or 2020, why the founders insisted on such high valuation?
It's because of the market.
Just the market, just playing the market.
Yeah. So I met this founder a few weeks ago, and he asked me, "What's the valuation that you're using?" And yeah, basically, generally the other VCs as well.
Yeah.
So I shared the number. It was this X, not the number.
Multiple of revenue.
Multiple of, yeah, I think it was multiple of
Revenue, okay.
And then his reaction was, "Oh wow, that's the multiple. Last time he raised, if someone's offering that multiple to him, he would just end the conversation and move up." So basically, he got much better multiple at that time. now the company, the business is already profitable. He doesn't need to fundraise anymore. So he's settled. But at that time, why he was using that multiple was because of the market. The market multiple was so high.
It's a basic demand and supply thing, right? I mean, if the market is willing to give you a higher valuation, you will chase higher valuation.
Yes.
I think it causes so much of problems gradually, right? If you are going for very unreasonable valuations, it causes a lot of problem, I believe. Lot of these founders tell me. Okay, let's talk about companies which have already raised money. Let's say from your experience, people who have raised money from Trihill. What does the process? How does it work? What is the relationship between Trihill and the founders who have raised money from Trihill?
We position ourselves as a partner.
Okay.
Thinking partner, a partner to also deliver what needed to be delivered. So we develop our team to have this empathy towards the founders and the businesses. Like I mentioned to you earlier, we don't want to be superficial. We came from backgrounds of real business execution, understanding the complexity of operations. For example, recruitment.
Okay.
I don't know. Some VCs would advise startups to just throw money at the table.
Correct.
And for us, it's unwise. I've experienced a process to downscale the organization. It was not great.
It's never good.
It's never good. And I think not advising a certain approach in operation would be important for the business, for the founders as well.
Sure.
So I think that's how we develop our team to empathize and to advise the right advice to the founders.
Sure. How about audits? Do you conduct regular audits in your funded companies?
Yes, we. Of course, it's not us.
Of course.
Yeah, we asked them to appoint an auditor.
Was this a general practice before 2023, 2022 as well, or it
was a general?
It was a general practice. Okay. So let's talk about some sectors, right? Some verticals. Let's hear your thoughts, right? Edutech. What do you think?
So we've invested into a couple of Edutech companies. For me, it is promising in a sense. Like generally, education has grown in importance. So a lot of people, especially parents, are now more aware than ever, I think.
Sure.
That education is very important.
But do you think it was, most edutech companies overestimated the market? Do you think most thought that the growth they saw during COVID will be there forever and it will just keep multiplying? Do you think that was the case?
Okay, I'll speak on Indonesia market.
Yeah, only Indonesia market. We're talking about Indonesia market.
So a lot of people, be it founders or much more investors, tend to oversimplify Indonesia market. If we see our metrics like 270 plus million people,
Correct.
growing middle class, growing income, and whatnot, it is a very promising
Correct.
market. But because I was born and raised and trained in Indonesia, I sort of have a more first-hand experience and observation of the market. The market, we need to see the real people, right? The real most of the market, how they behave, how much they're making, how they prioritize their spendings.
Correct.
And Indonesia market is so we're talking about culture here. Our culture, frankly speaking, we don't put education as high as other cultures.
Absolutely, you're spot on. You're spot on.
And I think when estimating the potential of Indonesia market, Indonesia's edutech market, we also need to consider that. And I believe many would overestimate many have overestimated that size.
Us as well. So when we started, just to take it from where you dropped, right? So when we started last year, even we went through a very simplistic design, right? Wow, this large population, this age group, everyone can read or write Bahasa, internet penetration, smartphone penetration. Suddenly the market looks 190 million, right? Very large TAM. Within 3 to 4 months, we realize something is wrong. We are targeting everyone, but our metrics are bad, right? We figured out something is wrong. Went back to the drawing board, figured out no. The real market size for us as well is only 40 million, right? We basically started looking at income parity, right? For example, what is the number of people who have income more than 10 million rupiah, right? What kind of population will fall into a category in next 2 years or 3 years in that income bracket? Where is this population? Where is this segment? Right? Started shrinking the TAM. Like, okay, now this is it. Now we're talking about real TAM. Now within that, there'll be micro segments and you start targeting them. The metrics improved after that drastically. So agreed with you. What's your thought on Fintech?
Oh, Fintech.
Okay, let's break Fintech in 2 parts. Lending, right, and non-lending.
So I've been observing the financial industry for quite a number of years,
I'm sure.
and I do believe that the market is large. The banking sector has not served everybody.
Sure.
There are certain parts of the market that the banks are also not incentivized to serve. So even if they're serving who they're serving right now, with the growth and whatnot, they're already successful.
Sure.
But there are certain pockets of the market that the banks, I wouldn't say couldn't, but to an extent, the banks are not incentivized to serve.
Sure.
It is too risky, and they're again, probably they're not that incentivized to figure things out regarding the processes and whatnot to be able to serve those segments. And I believe the startups are figuring out ways to serve those markets.
But the interest rates are insane. I mean, I look at the interest rates which some of these cash loan companies give, although the ticket size is small. Ticket size must be 2 million rupiah or 3 million rupiah, but interest rates are as high as 12% a month in a lot of cases. Yeah, that's it. By the way, that's a maximum limit by the government. but people enforce maximum limit. Like 12% a month is insane, the way I look at it. Okay. But you're right. I mean, still, there's a large population which is not being served by the traditional banking industry, which is fair. Okay. Rightfully. Correct. Absolutely. What's your thought on creator economy, influencer marketing, and more?
Very promising, because again, observing the cultures, different cultures around the world. This is my personal term.
Please.
Indonesians are not known to be industrious. Like, we're not, quote unquote, born engineers. Like,
Sure.
there's very structured, very technical. But I must admit that Indonesians are known to be creative.
They are. Absolutely.
So again, this is a very general observation.
Sure.
I do believe in the potential of creator economy, because generally Indonesians are more creative. But again, I think it's oversimplifying the.
Have you guys invested in any startups in creator economy?
To an extent, yes.
You have.
Yeah, we have. It is one of our recent investments.
Ah, nice.
And they are basically creating a platform for these creators to transact their products.
Ah, very nice.
It is quite a niche currently, but we believe that this niche is quite large in terms of monetary value.
Sure. Let's we are towards the last end of our podcast. What is one piece of advice which you would want to share with anyone who's starting up in this environment? It's a very difficult environment. It's not an easy environment to become a founder. So rather I'll ask two questions. One, what is your piece of advice to anyone who's starting up in this environment? Second, do you think people who are starting up in this environment have more conviction and more resilience compared to someone who started in a easier economy?
Yes, I believe so. I forgot the term, but like difficult condition.
I think I heard it on one of the podcasts as well. Difficult times create strong men. Strong men creates easier times. Easier times create weak men. Yeah. Okay, interesting.
I do believe that I do encourage founders to start up during this kind of period. Why? Because it builds their muscles early on, as compared to, let's say, founders who started up during the nicer years. They are so used to VCs throwing money at them. Easier times, they may not build the right muscles.
Sure.
But eventually, because economy is cyclical.
Yeah, correct.
Difficult times will come, and the challenge may feel harder. Yeah, compared with as if the founders start on during the tougher time. So the founders would be more used to tough recruitment, tough capital,
a lot more hustle.
So
Before we go on to the last advice part, let me ask you one thing. In this environment, with this kind of capital limitations and more, do you also give suggestions to the founders? Like, for example, how much should they pay themselves as salaries?
frankly speaking, you don't get a formula for that.
Okay.
But we do encourage them to be thrifty. I mean, so startup founders are two jargons that sort of recently became a
thing.
thing.
Yeah.
But since the very beginning, right, entrepreneurs, they started up businesses, and how much do they pay? Basically, whatever the business can pay them.
Correct.
Would like to bring that wisdom back to that kind of mentality.
Sure.
But of course, you need to prioritize your operations, your employees, before taking some for yourself.
Sure.
So I think that's generally the idea.
One last question before the advice and before we close. I recently was reading a couple of instances in other countries where the founders decided that, hey, listen, we are not achieving the product market fit. They returned the money to the investors and shut shop. I want to hear your opinion on two things. One, do you think that a lot of startups are in such a situation in Indonesia, but are not willing to accept it? What do you think? Your personal opinion. I'm not talking about your portfolio as such. Just your personal opinion. You've been in the market, right? So what do you think? Because I hear that there are quite a few startups who are at that verge of it. But again, I think you are a better position to share your thought.
That descriptive word, like a lot or not, I couldn't validate.
Sure.
Yeah. But I do believe that there are some businesses that may need to revisit the models.
Sure.
Some models probably just don't make sense commercially.
Sure.
For example, the cost of doing the business is as such, and the willingness to pay of the market
less than the cost of
delivering the
sure
whatever goods and services.
Sure.
I do believe that there are some models that are that way, and I do think that the market is still normalizing.
When do you think it's going to get normal?
Hopefully soon. I don't know. Up to 4 quarters.
Up to 4 quarters? Insane. Okay. Very encouraging. Thank you. Very encouraging. Okay. Let's close the discussion with two things. One is one piece of advice which you want to give to people who are starting up right now, and the final would be how they can get in touch with you. How can they apply to get evaluated by Trihill?
So my piece of advice would be go back to the basics. Like I share, like we discussed earlier, this is not a new
phenomena.
It is an activity that is already been executed for so many centuries.
Correct.
And go back to the basics, that this is solving other people's problem and solving it in a way that commercially makes sense. So it is supply and demand and whatnot. So go back to the basics of the unit economics, and having that wisdom of like thrift, right? Really look at things whether it makes sense or not, be it on pricing, be it on our expenses as well.
Sure.
And be true to oneself, right? Whether this product or services makes sense to be delivered with whatever cost that it entails.
Sure.
And we do believe that there are still a lot of opportunities. Indonesia, I think we had this discussion beforehand, is largely underdeveloped in terms of infrastructure.
Correct.
So in that kind of situation, of course, there are a lot of opportunities to solve problems. And this is the right time to start, build the muscles. If the founders can navigate the tough markets, the easier markets would be
a smooth ride.
Exactly. That's right for them. And yeah, we can be reached at LinkedIn. You can search our profile there, as well as you can visit our website.
Perfect. Thank you so much for doing this. You were extremely candid. I really love that. I think we all learned quite a few things about how seed funding works and how you go about it. So thank you so much for doing this, and best of luck.